Welcome to the AACFB's 2026 Meet the Funder webinar series. My name is Monica Harper. I'm the Executive Director of the AACFB, and I will be your host. Our presenter today is Tyson Garrett with Alliance Funding Group. Alliance Funding Group is both a funding source member and a platinum sponsor of the AACFB, and I'd like to thank them for their support of the association. Before I introduce Tyson, I'd like to go over a few things to make this webinar more enjoyable and informative for everyone. During the presentation, you should see a Q&A box that allows you to ask questions. If you have any questions during the presentation, please submit your questions in the box and they will be answered by the end of the webinar. Please reserve the chat for communication between attendees. The entire webinar should take no more than 30 to 45 minutes. And for those of you who'd like to review this at a later date, it will be posted on the 2026 Meet the Funder page of the AACFB website, and it will be emailed out to the AACFB membership. At this time, I'll turn it over to Tyson. It is all yours.
Thank you. And thank you for allowing us this platform. I've been involved with AACFB for many, many years, probably more than I can even remember. I was trying to think back to it. And I think when I was with Pawnee, the last Meet the Funder webinar I was a part of might have been 2016, 2017. So dating myself a little bit there. So thank you for this opportunity to put AFG out to the members. And members, thank you for paying attention and listening. And I welcome any and all questions either during the presentation or afterwards. All my contact info will go over with along with my team's contact info. And we welcome any chance to connect with members of AACFB. So let's get right into it. If you don't know, we commonly refer to ourselves as AFG to abbreviate Alliance Funding Group. If you have never talked to one of us, we would certainly love to hear from you guys. I wanted to put our entire team up here. So Alliance Funding Group has a dedicated channel to brokers specifically. And you're looking at, I'm hoping you can all see my screen, you're looking at all of the members of the support team. I head up the department. Ashley Bradburn, you can see here, is our Director of Partner Engagement. Katie Bates covers a lot of our East Coast hours as she's out in Portsmouth, New Hampshire. And then Adley is our newest member, just coming on to our team this year. And she is in our headquarters in Tustin, California. So she's helping to hold down West Coast hours for us. And then Ashley and I are kind of floating all day in between. So this is all of us. So if you see one of our names or if you see us at one of the AACFB conferences, which Ashley and Katie just got back from, please be sure to say hello and introduce yourself if we've not yet gotten acquainted. The first product that we have that I want to jump into today is, as some people within our company say, is our most sexy product, and that's our working capital. You can sort of equate it to very similar to what's out in the marketplace, as we have weekly and monthly options for payback. It's short term, as you can see, 15 months. But where we try to really strive and set ourselves apart here is the lowest cost of funds. We recognize that for equipment brokers, oftentimes the working capital can be a big pill for their clients to swallow when they see the cost of funds. So we specifically designed this as an A credit, should be the lowest funds in the marketplace. And what you're not seeing here is something we recently rolled out, which is retention pricing. So after this webinar is over, if you want to see the retention pricing, which, believe it or not, is even lower pricing than this, please reach out. We'll get that information over to you. But we only look at better credits in this product category simply because we feel like the marketplace has plenty of options for you if you've got someone outside the A credit box. So if you have a B credit, C credit, we know that Channel, fill in the blank, Peak, On Deck, a lot of these companies have products that you can get your clients into that maybe aren't a top tier credit client. And so we'll leave that to them. But our desire for our partners that work with us is to be able to offer the lowest cost option when it fits for your client. Couple other big highlights here is that we don't charge for principal only payoff. So If you've got that A credit client and the client is concerned, hey, what if I want to pay this off early? We don't mark up our buy rates. We don't have two separate approvals if you want a principal only payoff versus if you don't want a principal only payoff. It's just available for any of your clients that you get approved with us. We at times can stretch beyond 15 months. As you see here in great big type, we do up to 300,000 app only. So application page, 3 months bank statements. And then we look at these clients as your clients. And so we don't have a renewals team. When your client's eligible for renewal, we'll notify you, and you're going to make all the points all over again. The early payoff advantage works in a renewal, so they're not rolling any interest into the new loan. And we do pay the commission out on gross funding on those renewals as well. And then way down here at the bottom, I'd like to point out that we have dollar amounts above our app-only limit. We will approve transactions up to $3 million for working capital, but that will require a full financial package. If you'd like to see what we need in a quick summary of bullet points on a full financial package, please just reach out and we're happy to kind of go through that list with you. And I don't think there's much more to say on this. So if there's any questions on this program, please let us know. Then we get to the product that really started AFG on their road back in 1998 when we started. We have app-only equipment financing. We range our dollars on the low end of 50K is our minimum transaction size to 500,000 for our app-only equipment financing product. Unlike the working capital, which is A only, we will look at A to C credits, so they don't have to be perfect, down to a 600 FICO, minimum 2 years time in business, minimum PayNet master score is a 620. A little side note on that, we like to empower our partners that work with us. So if you're interested in what's on a PayNet that we found on the application you've submitted to us, we're happy to dissect that, share information with you, kind of let you know what we're seeing in PayNet. Another big point with us is we aren't currently offering discounting. So we allow up to 20 points commission cap on any of your approvals. And those rates are going to range from 8 to 23%. I hesitate to say it once in a while, we'll dip just below that, but it's just not very common. And then something that's unique to Alliance Funding Group is we regularly work with our brokers on mid-ticket transactions. And those transactions, as you can see on the screen here, are going to range from $500,000 to $50 million per transaction. Because we're not bank owned, we do non-bankable credits in middle market. So even $2, $3, $5, $10 million transactions that simply the financials just don't quite support it as far as bank underwriting would be concerned, we can do structured finance that will allow us to still buy a mid-ticket deal that doesn't necessarily fit what you would consider a traditional mid-ticket credit parameters. And then lastly, we like our partners to make money. So even on those mid-ticket transactions, we're not going to relegate you to, hey, most we can pay is 1 point or something. We'll work with you and say, hey, what do you need to make on this deal? And we'll try to make sure we can build that into the transaction for you. One thing to note that I'm very proud of about Alliance Funding Group is that we offer what I feel to be a full suite of contract types. We have EFAs, which everyone loves. We have dollar out leases. And then we also have the term residual lease. And the reason I put Ask Me More is because it really allows us to be able to do transactions in disclosure states without having to add any disclosures, because a term residual lease, as far as we're concerned, is an operating lease and doesn't need to require the loan disclosure pages. And then, as any true leasing company would, we offer an FMV product as well. This next slide is just a little information. I'm not going to read through this, so if you can't see it on your screen, please ask. I'll make sure to touch on these points. But really what I want you to take away from this slide is that Alliance Funding Group started out as a broker. And so we uniquely understand the challenges and the things that you guys go through. And our number one goal is to help you be profitable. And in doing so, we understand that you've worked very hard to acquire these customers. You've worked very hard to develop and deepen your relationships with your vendors. And so we have a very solemn commitment to all of our partners that your clients' information and the vendors you work with are not accessible by anyone here at AFG. We purposely lock out all the submissions that come in through our third-party channel, so no one on our direct sales side can access that information. And further, we commit to you that if you send us an app and we decline it or approve it, or however we end up with that particular application, we're not going to market to them down the road. And furthermore, if you fund them with us and they're used to making payments to us and they reach out to us and say, hey, I need another transaction, our policy is to simply proactively get them back in touch with you and say, hey, we'd love to do another loan for you, but let's get you with your designated broker, and they will help decide if we're the right fit again. Because maybe we're not. Maybe the transaction is unique and we're not necessarily the best fit. So we are very much committed to all of our partners to treating you like a partner, and that a good partner is not going to go behind you and call your vendor and say, hey, you can work with us directly. A good partner is not going to simply write another loan for that client and cut you out of the deal. And we take that very seriously. And we've seen over the years how that hasn't always played out. And we don't want that to be our legacy. And the last thing, and I would be remiss because we're very proud of this, is just as of recently, we have the size and the scale to be able to service pretty much any size or type of transaction that you might run across. We've done a lot of business in the time AFG's been around, and we currently now have just crossed the threshold to $1 billion of assets under management that we're currently servicing. This is my last slide, and hopefully you guys have drummed up some questions for me, but please take note of the email address there at the bottom if you didn't want to write down everybody's personal coordinates. This email address goes to all four of us. If you're not sure where to start at Alliance Funding Group, just email strategicpartnerships@afg.com for any and all questions. It goes to our entire team and it will get you the most immediate response. So now I'll turn it over to any questions that anyone might have, which I'm hoping are at least a few.
We have raised hand from William Scott, and William, you should be.
Yeah, just give me a little bit more detail on your guys' structuring and what you do with the term residual leases.
Absolutely. I'm no stranger to term residual. For those of you that might know me, I spent many, many years at Pawnee Leasing, and Pawnee was the pioneer of term residual lease. And the way they're set up, and the reason for their naming is if you have what you would traditionally think of as 60-month term, we're going to break it up into 55 payments or 55-month lease with a 5-month purchase option. And 60 months, as we all know, is 5 years. So the term determines the purchase option. So 5 years is 5 payments. A 4-year term residual would be a 44 and 4 payment purchase option. A 3-year term would be a 33-month lease with a 3-month purchase option. So the term, as the name implies, term or residual, the term of the contract is going to determine what the purchase option is. So for all practical purposes, if you ran your T-value and came up with a figure for, say, a 60-month EFA, the total number of payments on your EFA is 60 on a 60-month. Well, the total number of payments on a term residual lease is still 60. It's just, instead of 60 payments, it's 55-month base contract. If the client elects to purchase the equipment, they would simply make 5 more additional payments over the course of 5 months, and then they would own it. And so the way you can think about it is, if I have an EFA, I can quickly pivot that person into a TRL. Their monthly payment dollar amount doesn't change, and the total number of payments in order to own the equipment doesn't change. Did that answer your question?
Yeah, I think it did, but ultimately, if they get to that 55-month mark, what's the requirement for notification for purchase, or is there some sort of return option built in, or I'm just kind of curious how you can protect yourself to make sure you get that 60-month of payments when it's a 55-month term plus the 5-month residual at the end?
Yep, great question. Our data has indicated that, nearly no one would ever return it. And so we're just banking on the fact that they're going to want to make those 5 payments. However, if they don't, the base lease agreement does give them instructions on returning the equipment. It says to a location that we're going to designate. All they have to do for notification is either phone, email, or mail. And we have a customer service team, a full-time customer service department. They can call into our end of lease customer service team and say, hey, I'm at the end of my term. I want to go ahead and exercise my payment option. If we don't hear from them, we're going to draft those payments. But our team will proactively reach out to them too once we get to the end of the purchase period.
Okay. Is there a window in time where they would need to make that notification? I know historically, kind of back in the day, there were leases that had, anywhere from 90 to 130 day or 160 day window, 120, whatever it may be, that somebody had a notice or the deals would renew. I'm assuming that's not the case, but I'm just I'm trying to understand kind of the details, because this seems like I've got a number of deals that this would be ideal for.
Yeah, I mean, we're not going to try to play hardball with them. Obviously, we have stuff written into the contract that, says, hey, if you don't hear from us, we're going to renew the payment because we don't know what to do at that point. But if you look us up online and you check our reviews, we're not here to pull one over on somebody, right?
No,
it's
totally
right. So right, it has to be built into the contract because we have to protect ourselves if somebody goes MIA, right? We want our residual, so we're going to bill them, and it's written into the contract. It does say in the contract that we'd like 90 days notice, but again, if they miss that window and they call us and go, hey, look, my contract says I can buy for 5 more payments, please, I want to own it. They'll just put it into place and say, great, we're going to continue to draft like we've always been, and then we'll make a note here that that was your election. But no, we're not trying to do the, I don't want to name names here, but like companies that try to put you into an auto renew for 12 months or something like that.
No, I understand, and there's companies that do that. So
right, again, to us, it's not worth the bad press.
Yeah.
It's just not. Yeah,
100%.
So people will read the contract and say, oh, it says this, this, and this, and they're like, well, yeah, we have to have consequences, right? Because we want people to respond. But at the end of the day, if they just call us and tell us what they want to do, we're happy to work it out with them.
Can they make that election at the inception of the deal? Let say, hey, I'm going to do the 55 months plus I want to do the next 5 or the 5, or does that kind of
I think if they send it to us, I think we can put it into the file, but I would have to get back to you on that because I honestly can't remember if I've ever been asked that before.
Well, yeah, it just makes me almost think if they did that, then you're
covered. Yeah. Well, let me make a note of that, and I'll be happy to get back to you on that. Pre-election. I've always referred to that as pre-election. So.
Okay. Excellent.
So great question. Is there did you have any other questions or were there any other comments? No problem.
Yeah, we had a question on working capital loans. Besides 3 months banks, do you require the customer to fill out your application?
No, we do not. We will still, just like we will on all of our other transactions, we prefer to take the application page that you had filled out, provided you have the adequate, credit release authorization, sharing information in your credit application. We actually prefer just to use your credit application.
Todd also asked, he met with a company that does 3D concrete printers, and they run about $900,000. This is fairly new industry and exploding. It seems like this is equipment that many banks would shy away from, but is it something you would have no issue with?
Yeah, great question, and right on point. We have no issue with the asset class or that specific asset. We are not bank owned; we're privately owned, so we make all of our own credit decisions, and that is an asset that we are willing to consider on submissions.
Okay. Do you finance startups?
So. Officially, it's not part of our wheelhouse. So you won't find any information about it in any of our literature. It's not really something we focus on. Traditionally, on equipment deals, we ask for 2 years' time in business or greater. The reason being is twofold. One, we feel like there's really good sources out there that actually do focus on startups, and they're really good at it. And so we don't tend to want to compete with them. We say, hey, no, like, I think we kind of all know who those companies are. And we feel like they do a great job. So we don't know that we can bring a lot to the table there. Secret menu time, I say, yes, we've done them, and we will look at them on a one-off basis. So it's just a little bit more cumbersome and it's not really app only. So if you have a really good client, they're needing more than what some of the industry leaders are offering. I think right now most of the startup guys in the space are at dollar amounts in and around 50,000 or less. If you get 2 years personal tax returns on the owners, a personal financial statement, you get us some more meat and potatoes in the submission for underwriting. We will occasionally look at startups for well-heeled borrowers, so good assets on the personal financial statement. We're obviously looking at the personal tax returns to see, their financial situation. At times, we will look at startups up to 150,000. Is there any follow-up to that? I mean, I kind of blew through that pretty fast.
I don't see any other questions or hands raised, so I try to give it a pause for a minute because they always come in right when I say we're done. But it looks like that's it. So since there's no more questions, we'll wrap things up. I want to say a big thanks to all the participants, and especially our valued funding source and platinum sponsor, Alliance Funding Group. Thanks for a great job, Tyson. And we invite
you're welcome
to meet with Alliance Funding Group in person at the Commercial Financing Expo coming up this October in Irvine, California.
Yeah, we look forward to seeing everyone there.
Wonderful. Thank you, everyone. Have a great day.
Thanks.